Good evening, everyone, and welcome to the monthly work session of the East Rockaway Board of Education. I'd like to call this meeting to order at 6:00 p.m. on October 15th, 2025. At this time, can we please stand for the Pledge of Allegiance? I pledge allegiance
To the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay, Mr. DiTomaso?
Yes.
Present?
Yeah, I just wanted to mention one thing for new business, that our district-wide safety is up and running on the website. We just had our safety meeting yesterday, and there are a few updates. If you have any questions about that, please let me know. It'll be on the website for 30 days and then be up for adoption. So that's our district-wide safety policy. That's it for new
All right.
business.
All right, thank you. So next is the audit presentation.
Great, thank you.
All right.
You need a stand, sit, what do you?
Where's the best spot, Claire?
Maybe move closer to the table, closer to the microphone.
Want me to stand? It's easier?
Yeah, that's great.
Okay, perfect. I'll be quick. So thank you. My name is Dave Tellier. I'm an audit partner with Rocky Smith. We perform the audit of the district's financial statements for the year ended June 30th, 2025. So I provided you with a presentation. I'm going to kind of flip through it quick, just kind of give you the highlights. Stop me if you want to talk about anything specific. So before we get into the numbers, first and foremost, just talk a little bit about the district. Another great audit cycle. The business office did a tremendous job. Mike, Ellen, everybody else that we kind of worked with, phenomenal to work with. We really appreciate all the time, effort, energy that gets put into this. I probably say this a lot. I say it a lot here, and I've probably been caught on Mike saying it a lot. But just to understand for the committee members, for the board members, is for me to take a minute to kind of reap my praise on them. Remember that this entity is about a $45 million business entity that works with a handful of people in the business office. It's not a for-profit company that's got, accounting divisions and controllers and CEOs and all this other stuff to manage it. You've got a few people that are running the show here. We came in within 45 days of year end, and the district was closed out. We had a couple of adjustments, which were year end kind of closing adjustments that we worked with the district on. Outside of that, everything was found to be in order. No material weaknesses, no significant deficiencies. We had no findings, recommendations, or suggestions. Everything is operating efficiently and effectively. So for the 2 quick minutes that I had, I wanted to make sure that you understood that the business office is operating very, very well.
That's good to hear.
Thank you.
Thanks, Ellen. Thank you, Mike. Thank you.
So and then the last thing before we get to the numbers is there was a new accounting standard that was enacted this year. It was called GASB 101, related to compensated absences. Just the new standard kind of talked about different ways in which compensated absences should be recorded on the books and records here at the district. Again, this is on the full accrual side of things. Doesn't affect your day-to-day operations. Obviously, people retired, they get paid in accordance with their contracts, things of that nature. But on the full accrual side, there was a difference of how we should be accounting it, which resulted in a prior period adjustment about $1.1 million on the overall aspect of things. But again, that's on the full accrual side, not on the day-to-day operations of everything. So then I'm kind of walking you through the financial statements. The first few pages, as well as the last few pages, is our auditor's report. Everything was a clean or unmodified opinion, which means that the numbers are presented in accordance with U.S. generally accepted accounting principles, and our audit was conducted in accordance with U.S. generally accepted auditing standards. We move into the first section, which is called the management's discussion and analysis section. This goes through pages 4 through 14 of the main financial statements that you have. This just provides a general overview and analysis of the financial statements. Has comparative data. We look at variance and analytics and things of that nature. It's nice because it gives management the opportunity to really put some words into what actually happened, as opposed to just having numbers on a piece of paper. It actually talks about why did things increase or decrease in a certain regard, or what was new to the district this year, or what's coming due or coming up that's going to affect the district, whether it's financial related, enrollment related, things of that nature. So it's a good read for any district, but specifically here, especially if you don't have time to go through the 65 pages of all the other stuff, it should give you a good snapshot of what's kind of contained there. The next section is what's called the district-wide financial statements. These are on the full accrual statements. So some of the key things here that I wanted to point out, the district has capital assets net of depreciation totaling about $55.6 million, with a net increase of the year a little over $622,000. That means the additions and the capital projects were greater than the depreciation charges for the year. So there was an increase on that side. You have outstanding bonds payable totaling $15.6 million. You had a current year issuance of about $4 million, and you had principal payments or pay downs of about $645,000 in accordance with the debt instruments. Your total other post-employment benefit liability sits at $38 million, with a decrease for the year of about $5.5 million. This was primarily related to some changes on the actuarial side. Primarily, the discount rate went from just under 4% to a little over 5%. So that changed some of the parameters there. Big thing here is, again, that's this large number that's out there, and it's great to know, and it's usually for informational purposes. But how did it affect the district? So on a current year basis, we had $1.2 million of payments that were made on behalf of our retirees of the district. So that's the cash that actually, left due to that liability. So. Just going through the next section is called the governmental fund financial statements. These are the funds that are managed on a day-to-day basis by the business office. The first fund is your general fund. That's your main operating fund. This is what the voters have approved and voted and approved the year budget for. So at the end of the year, you had total assets of a little over $22 million, with total liabilities sitting about $3.7 million. You actually had what they call deferred inflows, or really deferred revenue, relating to the last property tax payment that was made by Nassau County was received after the 60-day window, so we couldn't recognize it as revenue. So that'll be recognized next year. So that was about $758,000. And that leaves you fund balance of about $17.7 million. Of the classifications within the fund balance for the general fund, you have $1.9 million in unassigned or unrestricted monies. District is allowed to carry over 4% of next year's budget as unassigned or unrestricted. You're obviously within that. You have $1 million of assigned funds. This is monies that have been appropriated to balance next year's budget, as well as some encumbrances or items that related to this fiscal year that will be received and paid for in the next fiscal year. And then you have $14.9 million of restricted funds. And of the restricted funds, you have 5 different reserves. The largest being the capital reserve, the retirement contribution reserve, and then a new debt service reserve that was created this year. Again, everything was found to be well within applicable limits and allocations within that. For the year, on the general fund side, you had total revenues a little over $45 million, total expenses of a little over $44 million, to leave you with a net change of about 2.5. What we like is when we look at this, the budget, your revenues were over budget by about 1.4 million, or about a little over 3%, and your expenditures were under budget by about 986,000, or a little over 2%. So really managing the budget very, very well on a day-to-day basis and a year-over-year allocation. The next funds that are in there, and I won't go into too much detail, obviously, is your capital projects fund that manages all the capital projects that's administered here throughout the district and overseen. These are projects that are obviously not just, well, some can just be within the year, but some are multi-year projects, so they span over time. The current year, I mentioned that we did have a current year bond issuance of $4 million to start to continue to fund those projects that the district has going. The next fund is the special aid fund. This accounts for certain reimbursable state and federal grants that the district receives. So there is no fund balance here. Everything that's expensed or spent out is received or vouchered. The only thing here is obviously timing, because we have to spend the money first and then voucher for it and then receive it. So there's always a time lapse, a gap there. But outside of that, nothing was really noted to bring to your attention. The other fund is the school lunch fund. Obviously, it manages the operations of the food service program here at the district. You've seen over the last couple of years, we've had a reduction in the fund balance side with not only equipment purchases and increased costs and things of that nature, but again, you're now within the allowable limit, I think, of the carryover as far as what New York State allows you to carry on the school lunch side. So again, another great management within the district. The last fund is what's called the Miscellaneous Special Revenue Fund. A few years ago, this fund was created to account for the extra classroom activity funds and scholarships here at the district. So again, this fund is, you don't really see many liabilities here. It's kind of like a cash in, cash out because of what it's attributable to. And obviously the activities here kind of ebb and flow based on participation and how involved the students get on a year-to-year basis. But again, something to account for. You have $250,000 flowing in and out, based on activities of the students here at the school. So that's, I think that's a very positive thing. After the financial statements, the notes of the financial statements, all pretty consistent with the previous year. There are three things that I've highlighted for you here, just talking, the only changes that were made related to the new GASB standard that I mentioned. So we had to add in some additional language. So you'll find those specific pages. Nothing really outside of that to highlight. Finishing up the financial statements are the supplementary schedules. Some are required by the Governmental Accounting Standards Board. Others are required by the New York State Education Department. Those schedules are consistent with the prior year as far as content, format, things of that nature. So nothing new to point out there. So that's the main financial statements. We also performed the audit of extra classroom activity funds. That was a clean run modified opinion, both on the cash basis of accounting. So again, cash in, cash out. We have our balances left over to roll into the next year for the various clubs. We audited that. Everything was found to be in conformity as well. And then the last thing is the federal single audit, which we do a special audit relating to the federal funds that I talked about, kind of that's contained within the special aid fund. It's not only a financial audit, but it's also a compliance audit. We've done all the work. We have the report drafted, ready to go. We cannot issue it yet, only because the compliance supplement that is put out by the federal government is still in draft form. They have not finalized it yet. So we're not allowed to finalize our single audit reports until that instrument is finalized, so that we could verify that all the various compliance aspects of these particular grants have been audited appropriately by us. We don't anticipate there to be any changes in anything, but if there is, then we'll obviously have to stop back at the district to finish that work up. But we anticipate that being good to go once that gets finalized. And that's pretty much it. I kind of already mentioned that, no current year recommendations or suggestions. So
It's quick.
I hope. I could do it. I got 5 minutes. So I'm used to going quick.
And thorough. Great job.
Yeah, I hit all the hot topics. No, it's a lot of information. So again, the last page within there is my contact information, Steven's contact information, who isn't here, but he was our manager that oversaw the audit engagement with our staff. Anything comes up today, tonight, tomorrow, next month, 6 months from now, always please know that you can reach out. I'd be happy to have a conversation, explain anything to you, walk you through stuff.
Thank you very much.
So much.
Thanks a lot.
No problem.
Appreciate it.
Thank you very much.
Next. All right, items for discussion. Review minutes of special board meeting on 9/9/25. Are there any questions about the meeting?
No.
All right. How about any questions of the regular board meeting on 9/16? No questions? Okay. How about questions on the upcoming board meeting on 10/21?
No.
No?
Questions.
No.
Right. At this point, I have a motion to adjourn the work session.
Motion.
Motion by Mrs. Doyle, second.
Second.
Second by Mrs. Salufo. All in favor? Opposed, abstained. Motion approved at 6:13 PM. All right. Good night, everyone.
Good night.
Thank you.
Good night.
All right. Pete, you're not running yet.